Crypto has enjoyed a meaningful rally after weeks of aggressive selling. The initial catalyst came from the U.S. Treasury.
Have price feeds from each of the various venues that comprise the U.S. equity market, the dark pools, all the different ATSs, all the different exchanges, and you're constantly looking at the order books, right?
Goldman Sachs, JP Morgan, Citadel, 40 banks. They just ran a 4-hour live test of blockchain-based trading. Tell us a little bit about that. Tell us a little bit about how Stellar fits into that.
Yeah, I think the tokenization piece and what's happening with, tokenization of real world assets, of bank deposits, of even insurance, you think about everything as being tokenized today. And I think for the most part, people are realizing that blockchain actually really helps to make that happen. Having the banks involved, this is the thing that's interesting about if you combine it with Clarity. Everybody's already doing this. Like Clarity's not going to make this so that it opens up the floodgates. The floodgates have already opened. Everybody wants to do it. We have an SEC and a CFTC that are engaged in helping us to move forward with all of these things. The reason why we need clarity is because we need clarity in case there's a flip and the Democrats take the White House later. That's what Clarity would do for us. But right now we have all of these players already involved.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. As you all heard Danielle Dixon say, the floodgates are already open. In the past 3 days alone, this past week, $500 billion has been added to the digital asset ecosystem. In today's video breakdown, we're going to go over why. We're going to thoroughly read through our fundamental report. We're going to update you all on some levels that we have been paying attention to here at CYPRX, keeping you all accurately in the loop. Level to level updates, as always. If you guys enjoy, do us that favor, smash that thumbs up button, subscribe to the platform. We truly enjoy giving you guys this information. It does help this channel grow, and it pushes the algorithm to put this video in front of more eyes via individuals like yourselves. So let's dive in. Before we jump into the fundamental report and I bore you guys to death with the fundamental backdrop as to why crypto is absolutely freaking ripping right now, we'll get into that. We'll full circle back to that. First, I want to touch on some updated dark pools because wow, these levels are so freaking accurate. It is insane. Let's go back and take a look at what we were discussing and talking about just a few days ago when the market was relatively suppressed, trading at $2.1 trillion, as you guys can see in this little tiny screenshot. This is a video from just 2 days ago. Let's listen to what we were saying about Solana's price action and where it could potentially go if the market turned around and flipped bullish. Above the 85.11, just in case of an extremely optimistic environment, we have 94.16 and a 103.08 next on our radar to the upside. But we have some hurdles to overcome before we get there. So that was Solana. We were mentioning a $94.16 Solana, and then taking a look at our XRP analysis, we come over here to about 16 minutes and 40 seconds. And let's listen to what we were talking about on XRP. If we can break above $1.16 in a bullish environment and see supportive fundamentals, that'll open up the door for the next bullish hurdles of anywhere between $1.36 and $1.29. Mind you, again, this is when XRP was trading at $1. Now, let's fast forward. Let's take a look. We also talked about Canton in this video breakdown. Canton slightly suppressed below 10 cents. It's popped back above the dark pool. We'll get into that in today's video breakdown, but let's just go and take a look at where we're trading at and what could happen next. So XRP $1.36 dark pool has been hit. We are trading slightly above it at the sell wall that we mentioned in previous video breakdowns at around $1.43. Over on Solana's price action, we came, guys and gals, you cannot make this up. I really hope that everybody really truly enjoys this level-headed, accurate analysis. These dark pools are absolutely insane. And again, if you guys want access to these institutional dark pools, head over to CYPRXtrading.com. We'd love to have you on the team. As a matter of fact, we even had our institutional scalper today share a video breakdown of a $1 billion asset manager talking about dark pools today and talking about how they are the most accurate information available in the markets, even more accurate than SIP analytics. Take a second and listen to this.
Have price feeds from each of the various venues that comprise the U.S. equity market, the dark pools, all the different ATSs, all the different exchanges, and you're constantly looking at the order books, right? And then you compare that to the SIP, the SIP, which is the centralized thing. You would see that the SIP is lagging the real information if you were to reconstruct the SIP with better tech.
So this gentleman just confirmed that dark pools are even more accurate than SIP information, which is absolutely insane. So yet again, here at CYPRX, we have the software. You guys have the access. Head over to CYPRXtrading.com, tap in with us. We'd love to have you on the team. You do not want to go into this new bull market cycle without access to institutional data and accurate institutional data nonetheless. For example, ask yourself the question, how many price predictions out there that could manipulate you on XRP's price discovery once it goes into price discovery mode that exist out there on the internet? All these theories, all these $1,000 price predictions, when meanwhile here at CYPRX, we already have sell dark pools that exist on XRP well above current price, coming in the $4 to $5 range. We have dark pools. I'm not going to display what those are for you all publicly just yet. In our last video breakdown, we were trading at the 74.38. We mentioned that if that held as support, then we could see a nice bullish move into 94.16 as our next upside hurdle. So let's get into Solana, Canton, XRP. What could happen next? Take a look at the total cryptocurrency market cap. Let's conversate about this most recent massive rally and what it is that I'm looking at, and then we'll dive into the fundamentals here so that way everybody knows what's happening and what is going on with the total market cap. So first, taking a look at XRP. We haven't seen a candlestick like this since the last time that XRP went on this absolute parabolic run. So is that what's in store for us? We definitely need to see price trade back above the weekly moving average at the 50 EMA. And if we can supersede that, turning $1.57 into support, I'm going to go out right and say that the bottom is fully in for XRP and upside potential is underway. More upside potential nonetheless. But the hurdles are not over yet. So as of time of recording, this bullish environment has been so fun to watch. It's been great to participate in. As you all heard in previous video breakdowns, I told you guys I was dollar cost averaging in down at these lower levels. I was personally expecting some lower levels on XRP, but I did highlight that nonetheless, I was still taking advantage of the discounted environment. We are now trading at $1.36 on XRP. So if we can sustainably hold above $1.36, turn that into support, even if we do see a slight pullback right now, that $1.16 to $1.17 threshold is the line in the sand. As you can see, we have now a new base at around $1.07. So as long as we are trading above $1.07, the bull case for XRP still stands. A revisitation of $1.07 on the weekly chart would actually be a healthy correction after some profit taking for buyers to reposition, reaccumulate, and then push price higher. So anything above $1.07 opens up the door for some good price momentum to the upside on XRP, with our first bullish hurdle above $1.36 coming in at $1.57 next. If we do not see a retracement back down into $1.07, we sort of just consolidate above $1.29, in between $1.29 and $1.36. That would also be relatively healthy for another upside push up into the highs of $1.57, with the high coming in on the XRP charts right now for the dark pools at $1.98. So these are the most recent updated hurdles. If we surpass these hurdles, I'll start to give you guys some new updates to the upside. But right now, if we can stay sustainably above $1.29 to $1.36, retest $1.36, turn it into support, that's going to open up the door for a nice push into $1.57 to between $1.98. If we do not sustainably break and hold above $1.36, there is a case for a possible pullback back down into the reaccumulation of the base at around $1.16 to $1.07, where then we could see buyers defend and push price back to the upside. Right now, sellers would have a lot of work to do to absorb all of this recent buy volume and push price back to the downside. So the first scenario for bears is if we cannot see buyers sustainably hold above $1.36, and if we start to see bearish price action on the lower time frames like the daily chart underneath of $1.36, and we start to see this first bullish candle engulfed by sell volume, that would be a sustainable break and close below $1.29, would open up the door for a retracement back down into $1.07. If the bulls do not defend with sellers at $1.07 and $1.07 is overpowered by sellers, then that still opens up the door for a full-blown retracement back down into our overarching bearish target of 91 cents. Is that on the table for now? Like I said, sellers have some work to do. We would need to see a sustainable close below $1.29 before I even start to consider that as a possibility. a sustainable break and close below $1.29, and I would start to go outright and say that we could see a revisitation of $1.07. But as long as price is above $1.07, I do not see this coming into fruition. A break and close below $1.07 does keep the door open for a retracement down into 91 cents, with the lower targets on our radar still coming in at the 68-cent region. So far stretch away from where we're currently trading at now, we now have upside targets on XRP, and you guys have seen, keeping you all in the loop, how accurate these levels are. We're not here to gaslight anything. We're not here to draw Fibonacci's on our charts or predict random price action. We're here to give you guys level-to-level updates using dark pool and delta institutional information that is only available to retail traders inside the private CYPRX Discord. Coming over to Solana's price action. Solana, probably one of the most accurate call outs. Even on Solana, I mentioned to you guys, buying Solana underneath of $77 is an absolute steal. Now, full circle, we are trading at the dark pool at 94.16, slightly underneath of it at about $91.60 as of time of recording. So bull case for Solana. Upside hurdles still remain at $1.03. That would be insane on Solana, right? At $103.08 and $115.81 as our next two upside hurdles. So bull case for Solana, a sustainable break and hold above the 74.38, which we've already superseded, but even in the possibility of a potential pullback down into this base, as long as price is trading above 74.38, the bullish environment for Solana still exists. If we do not see a full-blown retracement back down into the base at 74.38, a sustainable hold above 85.11 or 80.14 still opens up the door for a nice push up into $103.08 to possibly $115.81 as our next bullish hurdles. Or we could just see a nice sustainable break and hold above 94.16, turn that into support, and then that would also open up the case for higher levels on Solana. Once these levels are broken or revisited, then I will, of course, make sure to give you guys some accurate updates. These are just the updates going into the weekend. On the bear side, so if sellers do overpower buyers, considering that we are still operating in this bearish environment on Solana, where we would need to break above this local high, coming in at around 98 to $100 before we can expect any higher prices. If we see sellers start to pinch buyers, trap them at highs, defend, become aggressive, after throwing up a passive defense, the first bearish target to the downside is, of course, going to be a revisitation of 85 to $80 on Solana. If we start to break below $80 and we start to see a bearish closure beneath it, that would open up the door for a revisitation of that 74.38. As long as price is above 74.38, the bull case for Solana still exists, which means a sustainable break and close beneath 74.38 opens up the door for more downside risk on Solana. The levels underneath of 74.38 still exist at 69.72, 63.60, and 54.70. Keep those levels on your charts in case downside risk opens up. Let's head over to Canton. Canton's price action. All right. In our last analysis, we gave you guys a delta level at the 08330 and the 09124. We mentioned that if the base of this delta held, that we could start to see buyers make another formal attempt to push price back above the 09453 and take out this intraday high at roughly around 10 cents. As of time of recording, we have seen that come into fruition, which means that the previous Canton analysis still stands, which is a sustainable break and hold above the 09453 opens up the door for a nice smooth move up into the next dark pool at the 12257. However, I've noticed that when Canton's price starts moving, it is most likely not going to stop at the 12257. So if we sustainably break and hold above the 12257, that is going to open up the door for a nice move up into the 14026 and the 15600 as our next three upside targets on Canton Coin. Downside risk, of course, we cannot outweigh. As always, I try to play both sides of the market. So in case of a risk-off environment, which I firmly believe might be behind us at this point, we'll go over that in just 1 second. But just in case, a sustainable break and close below the 09453 is a case for concern and could still open up the door for further downside on Canton. But we would need to see price trade below the dark pool at the 09453 before even anticipating that as a possibility. Underneath of 09453, the bearish targets still exist at the 07859 and the 05800. However, now that you guys have bullish targets on XRP, Solana, Canton, and bearish targets to be mindful of, albeit I personally don't think that there is more downside unless we see some crazy risk-off catalyst like the unwinding of a yen carry trade or a major escalation in the Middle East tensions or some type of default on debt or some type of just crazy out of the blue environment that just sparks a huge risk-off backdrop. If you guys remember in a previous video breakdown, I touched on revisiting this 50 moving average and breaking above $2.6 trillion as our last line in the sand, where sellers have one last attempt to defend against the buyers. But if we see a moving average crossover, just like we saw with the schematic back in 2021 to 2023, then this bull market cycle is about to ignite. And we are about to see something so massively unprecedented that a lot of people just are not even going to be able to fathom the price appreciation that we're going to see once institutional FOMO really starts to kick in at full scale. So what was I getting at here? If you guys did not watch that previous video breakdown, it went pretty viral over on Twitter. Hope that you guys enjoyed that. I showed you all that this schematic that we were operating in from 2020 to 2023 when we came out of the bear market is the same exact schematic here. And I mentioned to you all that we were operating at a discounted price at 2.05 trillion to 1.71 trillion, and that we were likely very close, if not at a bottom for the total cryptocurrency market. What would confirm that we are at a bottom is if we see a breakout from this area and we sustainably break and hold above the 50 moving average on the weekly and break back above all the bearish price action at the $2.6 trillion total cryptocurrency market cap dark pool. Now, as of time of recording, check this out. We have not printed a $500 billion candle. So this is a weekly candle coming in at $500 billion in one weekly candle since all the way back here in May 2025. And before that, November 2024. Prior to that, there are no $500 billion candles outside of February 2024 that exist in crypto's history in 1 week. So the question is, can this $500 billion rally sustain itself? Well, in previous cycles, every single time that we have printed a $500 billion candle, even if there is some chop or sideways price action after, it usually results in a bullish push. So with that being said, before we get too excited, we do need to see this high engulfed, which comes in at about $2.74 trillion. And we need to see a sustainable break and hold above $2.6 trillion, whether that looks like reaccumulation at $2.6 trillion, or whether that looks like a sustainable break and hold above this most recent high, then retesting the dark pool at 2.3 to possibly $2.6 trillion, and then a bullish move higher. So something like this. If we do not see a sustainable break and hold above the 50 moving average on the weekly time frame and $2.6 trillion, and we start to see aggressive profit taking, I'm going to go outright and assume that this was just a pump fake. Albeit a $500 billion pump fake is hard to kind of get at, but nonetheless, this is an exciting time to be alive, and we had so much time as retail investors to accumulate at these lower level prices. There are countless videos over on our YouTube going over how this could potentially start to be a bottom, especially mentioning that we were operating at an area of discount where a previous market cycle rally started to exist. This was the yen carry trade back at the end of July, beginning of August 2024. And we had annotated in a previous video breakdown that we were coming back into that accumulation schematic where the market went absolutely parabolic before. So with that being said, hopefully you guys enjoyed this portion of today's video breakdown. Let's roll over to the fundamentals and let's dive into what is actively happening in crypto before we head into the weekend. Crypto has enjoyed a meaningful rally after weeks of aggressive selling. The initial catalyst came from the US Treasury, which announced it would at least double the maximum size of its liquidity support buybacks for longer dated Treasury operations in the 10 to 20 year and 20 to 30 year sectors. The timing of the announcement was arguably more important than the actual dollar amount. The 30-year Treasury yield hit a high of 5.337, which was its highest level since 2007, before dropping sharply following the Treasury announcement. That provided immediate relief from one of the biggest pressures facing risk assets. When long-term treasury yields rise aggressively, investors are offered increasingly attractive returns and relatively safe government debt. At the same time, higher yields tighten financial conditions and increase the discount rate applied to risk assets. Falling yields, therefore, remove some of that pressure from crypto, equities, and other speculative assets. This should not be confused with Federal Reserve quantitative easing. The Treasury is not simply printing money and injecting it directly into markets. So the actual size of these operations is relatively small compared with the enormous Treasury market. What matters was the signal. After long-term borrowing costs surged to extreme levels, the Treasury demonstrated that it was willing to provide additional liquidity support to that part of the market. Markets responded accordingly. Yields declined, the dollar weakened slightly, and liquidity conditions became much more supportive. Crypto, which had already experienced a significant liquidation and sell pressure, was positioned perfectly for this relief rally once the macro pressure eased. On top of that, we had the Fed meeting in minutes this past week. The FOMC meeting in minutes were another important test, and they ultimately did not provide the hawkish surprise necessary to reverse the improving market sentiment. The Fed remains concerned about inflation, and several policymakers continue to believe additional tightening could become necessary. However, markets are increasingly treating the July meeting as backward-looking because we've since received softer inflation readings alongside weaker employment data. Rate hike expectations have therefore declined considerably from where they stood earlier this month for now. Next week, we do have core PCE and the Jackson Hole Symposium to be mindful of. There's also an interesting development beneath the surface. Markets appear increasingly concerned about economic growth rather than inflation alone. Growth estimates have moderated, economic surprise indicators have weakened, and inflation expectations have remained relatively contained despite elevated crude prices. That helps explain why the Treasury's relatively modest announcement creates such a significant reaction. The bond market was already questioning whether long-term yields had moved too far too quickly. Middle East slight improvement happened as well, but it's far from resolved. Treasury Secretary Scott Bessent provided markets with one potentially encouraging development, arguing that the administration's strategy of applying maximum economic pressure against Iran could reduce the need for another major military campaign. That is marginally supportive for risk sentiment because economic confrontation, while still significant, carries different immediate market risk than other large-scale military escalation. However, this is nowhere close to a resolution. We know Washington is still preparing significantly stronger sanctions against Iran. China has also criticized the strategy. Tehran has condemned the new economic measures, and the U.S. naval blockade remains active. U.S. Central Command says dozens of merchant vessels have already been redirected while enforcing that blockade. So, moving into this upcoming weekend for crypto. Right now, this break above $2.3 trillion is constructive, but $2.6 trillion and a break above the weekly moving average are the bigger confirmation. The question is now whether improving liquidity developments into sustainable risk on sentiment or simply gives markets a temporary break from the larger macro pressure still hanging overhead. So as we progress into this upcoming weekend and into next week, let's see if this market rally is sustainable. I'm crossing my fingers in hopes that it is. Many blessings to you guys. I hope that keeping you all accurately in the loop with these level-to-level updates, you all were able to get in on some of the discounted prices that we had touched on in previous video breakdowns. If you did, do us that favor, smash that thumbs up button, subscribe to the platform, and we'll see you all in the next video breakdown.